Hey everybody, what we're going to do today is a recap of stocks that moved uh, today on Friday. And it was a pretty volatile day, as everybody was aware. We got batted around a lot. At the end, I'll do the indexes that we'll go through, but there are some big movers today that I want to just cover, and there's some ones that were requested. We're going to get through those as well. As always, consider subscribing to the channel and clicking notifications. What we're going to go over is extremely timely. If you look at the NFT list last week, if you were notified of that and you watched it, there were 3 or 4 in there that actually doubled this week. And tomorrow I'm going to wind up doing at least a top 10 list because there's a lot out there that looks very interesting now. The close was very interesting today, and we'll get into that. But let's just dive into this. So the last thing that has to happen here for a market to finish correcting, whether anybody wants to hear it or not, is the leaders have to break. And what we need to have happen is we need these to break down a little bit. And we're starting to see that. We're really starting to see that, right? So the last time that Amazon was below, these levels, this 200-day was down here during the pandemic. And now we're breaking the 200-day and we're rolling. And we're not really rallying here. Like if you get through this, let's just walk through this. Exactly what's going on here? This is a rising wedge. You broke and you went to the top of it. So you're in a position here where this is not a ringing endorsement to get back into these. And if you look here, you can see these. See that? You see how you have this wedge and how it rejected, and then you had this wedge and it didn't, and it broke it? Like, this is not good. So what you're going to see here is you're going to see these leaders starting to break. And that's not a good thing. You don't want to be buying Amazon because of the PE right now. And I'm going to explain that just really briefly because I want this to be technical. And the goal of Arete trading and why I created it was to cut through all the crap and show people what it truly takes to be consistent and profitable and repeatable in what you're doing. So day in, day out, you have a plan and a process. And you need certain tools, and then how you implement those tools becomes your process. So when you see things like this and you start rolling over the 200-day and you can't break the 50-day, I don't care about the PE. PEs will contract. If the 10-year goes to 2.5, you can tell me all you want about the PE. The PE could be 10 at that point instead of 22. This will get cut in half. So just keep that in mind when you start thinking about buying companies solely on the premise of their earnings and a price earnings multiple. That it's a good gauge, but it's not the be all end all. Let's leave it at that. So right now, Amazon, for those that are interested, it is doing what I need it to do. It is breaking down, and that's a good sign. And we're starting to see strength in other areas. Now, this was a trade I'm going to walk through step by step. And as I said at the end, I'm going to do the indexes. But I also want to show people, like, I got a lot of questions today. How bad can this get? How low can things go? And I want to show you something that happened in 2000. Not even during the crash, but during the go-go days, something that happened that I think you'll find interesting. So let's get rid of these for a moment because we're just going to look at price, and I just want everybody to understand exactly what's going on here. And let's just remove this. Okay, and then you have these lines here. And so I've been calling live trades on Twitter, and if you don't follow it on Twitter, please consider following it because I give out actionable ideas. But I called this yesterday when we got up to the 640 range right here, and I said I'm shorting this again. And my one reason for shorting, and people saying, well, why are you doing it then? There's some other factors, but not to bore you with them. To just get to it, this was the low end of this range. We got to the top. What did we do? We reject. So what did you do there? You're not going to wait for an hourly to look if you reject, if you're trying to put on an option position. You can't. So you drill down in it, right? Now you can see the channel differently on the 15-minute, right? Now look at these lines. See how much clearer that rejection gets when you get to the top of that, right? Look how much clearer that rejection is here. And then you can drill down into it again. And you can look at a 5-minute, right? Now look. Do you see what I'm getting at here? Now look. Oh, we did here, and then we broke here. Okay, so that gives me, this is my entry, and this is my stop. Look how much faster you can get in this trade. And you can even go down to a 1 minute and overlay a bunch of other variables in there that I'm going to just stay focused on this and not get into some other indicators. But I really want you to understand the premise of this. This is that move in a minute chart. And you see where it got you in at? This would have got you in $1 cheaper than the 5 minute. And it's still the same stop, this reverse little hammer. And it would have kept you in there. So that's the purpose of when I'm calling these out, how I'm doing it. And then I put the trade on, and then you just let it roll, right? And then it comes down here, and you cover. You hit up here, right? And you put it on. And you can go look at the timestamps on Twitter today. This is when I was shorting it, and I was buying puts. Okay, this is when I was covering it. Well, as soon as we got down to this end, I was hoping for a break and to retest this level today. I didn't get that. And once I got my rejection, and I noticed my rejection the same way. We don't have to go through it, but when we got down to here on like the 1 minute, there's a couple other variables, but essentially when that happened, I'm like, okay, we're not going to break. When that happens, it's time to start covering. And especially if you're, I had a bunch of 640s today that I bought off the open. And so on puts, so I had to get out. I mean, the time value, the time decay is just going to kill you. And this is right where I covered some before, and I said that. But that was the trade. That's the trade in a nutshell. Understanding how to draw these lines is extremely pertinent to your success, and understanding how to do it properly. But let's walk through this again, Tesla, and what's going on. There's a huge anti-gamma trade going on right now, and there's an enormous fund liquidation out there. And some of these stocks we're going to look at today that blew up, and some were not. What should be concerning to people that are in this are a couple things. The way Chinese stocks are unraveling, the way fintech's moving, it's very possible. This guy wants to talk. So it's very possible that, not that we see a trade war, but that you start seeing people like China start leaning towards NIO or other companies. And there's a chip shortage now, and we'll get into that in a minute. So, but what I'm getting at here is, let's get rid of these. So there's a fundamental reason probably why this is going down, and we just don't know what it is yet. So you see how we're just rallying here? And we can't get up there? This is a bearish engulfing almost. If we closed down here, it would have been a full, technically bearish engulfing. We did not undercut this line. So technically, this is not a double bottom. To have a true double bottom, I have to undercut here, come down, jam, scare the hell out of everybody, and then go back. We didn't do that. We just floated up here, and we're just riding this wave. And all I'm doing is shorting it every time it gets to this line. And then when it comes back down, I'm getting out of it. That's all I've been doing, and it's extremely profitable. You just have to use shorter time frames and know what to do. But let's overlay some bells and whistles, right? Let's put some of these in. So you can see the 21's rolling, the 50's rolling. Let me lower this a little bit. So the 50's rolling, and this is curling down, right? And we're not breaking. If you get rid of, we'll leave the 50 there, but let's get rid of the 5 and the 8 because they're just noise right now. But look at this 21 day. You're just riding that. You're not even closing above it anymore. And this is coming in. We're going to here. It's just a question of when. That's my opinion of it. Now, if the market gets hot and we reverse, anything can happen. But fundamentally, if you look at what's going on here, the NASDAQ is getting a little bit better today, and this is getting actually worse. So there's something technically wrong here that we're going to learn about later on down the line. But price always tells you what's going to happen first. And you may want to remember that statement. Price always tells you what's going to happen before anything else. So this is Facebook, and we got a bunch of questions about this one today. And I'll get into the X later from the U.S. Steel. That was the buy in the newsletter today. And if you don't get the newsletter, it's free. Just sign up for it. There'll be a link in the description. And you get it 3 times a week. And it's stock ideas, what's going on with the indexes, and color commentary. Some of it I think is very pertinent. But you see what's going on here? Look, you have that downward trend line, and look what we did. We backfilled and tested it. I need this to break. I want it to break so that we can move on and the NASDAQ can go higher. because I really want the leaders need to break on a correction. This one is just being a honey badger. It's not going anywhere. So technically, if you were interested in buying this, I'll give you a really easy trade here. You can see where this line is right here. If you drill down into this right here, this level, you will see that this higher high, right, was at 284.50. You're at 285.39. You flip 285.50, and this thing's going to go back and test this upper level again to this 299 level. So there's like a 15-point move there. And your stop is simple. Your stop is if you close below here. So, right there, you could be looking at a 15-to-1 or, risk versus return. It's a very simple trade to do that. But you just want to watch that key level and what's going on there. And why is that a trigger? Because we broke this downward trend line. We retested it. We make the higher high. Boom. It'll re-engage. Institutions will look at that technically, and they'll get involved. And understand why technical analysis works, why we're on the topic. Technical analysis works because we're all looking at it. If we all didn't pay attention to it, it wouldn't work. It's that simple. So it's not, voodoo, witchcraft, magic. If a bunch of guys that are trading billions and billions of dollars are looking at the same levels, what's going to happen when they all go and they see the same trigger? It's going to go higher. And that's it. That's it in a nutshell. Let's get rid of this line. This was a short idea. When we came down and tested this line, I did say that if you want to cover it, go ahead and cover it. If not, just move the stop to 216 and break even. You get through this 215, just blow this out. You're not going to want to be shorted anymore. That's why it's so hard to call live calls on shorts, because you have to pay attention to them. Because your risk is theoretically, it could go on forever. It's unlimited. So what we're seeing here is we didn't undercut. We have this coming down. I still think we could roll here. But right now we have the 50 and the 21 crossing, and we have this little wedge here. So we have to see what happens here. But if you flip over the 215 line and you're short this, it's time to go. You don't want to play games. You want to wait for it to roll again, possibly test this line, and then re-engage that short. Or hopefully we get lucky and it pops up to the 50-day, 230, and then you can re-engage the short there. So right now, what do you do with this? Absolutely nothing. I will still be looking to be short this until it goes above the 50-day. That chart's broken. And when you come out of a correction, certain stocks are going to go up that didn't go up previously, and certain winners are not going to come back as fast. And that's just that's just what corrections do. So here's Apple, and you can just see this line the whole way down. And now we're consolidating here. And I've been talking about that. I think that we're in a position here where it's time for the buyers to step up. Well, here was your downward trend line. We had 3 days to flip over it. We haven't flipped over it yet. So I need this to get above it. Now, the one good thing that's happening is this 21 is starting to curl, and this, you see this, the 200, how it's curling? And so what I'm having here is this is a classic Minerva trade, but a little smaller scale. See how this volume contraction pattern is going on? He calls them VCPs. So like here, let's overlay this for a minute. And you can see VCPs when you throw in, that's going to confuse all of you. So let me use this one. And let's get rid of all these. And let's just drill down and get rid of this. And let's just make these bars for a moment. Okay, so let's just look at the bars and what's going on here. And I'm going to get rid of this line. I'm not going to get rid of it. I'm just going to pull it away so that you can see what's going on here. So right now, you see how this is contracting? Look how wide it was here, right? Look at the width here. I mean, you can, this is very simple to see. Here's the width of that bar, right? So you're roughly like 13% on that bar. Well, here we can just go up here. We'll go straight. So you're roughly around 13%, okay? And if you come here now, okay, you're at 9%. So basically what you're doing is your range is narrowing. When that happens, you usually get a coiled move one way or another. We call it coiling, and that's what it's doing. Now, what we've done so far is this. And what I tried to explain to people before, you see this blue line? You can see it right here. And let's try to blow this up a little bit so you can see it. Actually, you know what we'll do? We'll overlay the 21 with it, because the 21 or the 20, I don't care which one you use, but use one of them. And it doesn't matter. EMA, simple. Thinking that little move is going to make a difference is nonsense. So what you're seeing here by putting this in is the bears are still in charge. If we flip this, the bulls will be in charge, and we're going to go to the higher end of that. That's a simple trigger trade, okay? And you see how you're just getting tighter and tighter in here? This is setting up, okay, and it's setting up to move. Now, we still don't have the undercut, but we do have this downward trend that we broke. So we're going to consolidate and then push higher. So watch this and watch for Apple to re-engage. Now, let's just keep on going. And as always, please comment if you have questions or concerns. And I always like to hear what you think is the best idea that I showed today. I'm always fascinated by that, frankly. So let's get rid of this. Major support, look, we held it. This is where we initiated. It's interesting. We bought this at like 112 here, and we traded it up here. And then when we couldn't break the 21 day, let's get rid of these bands for a moment. And when we couldn't break the 21 day, that's when I told people, hey, let's see, we'll give it another day. We didn't. I moved the stop to 122 because the market was choppy, and I'm thinking, well, we might as well just take 10 points and move on. Technically, I like how this is not breaking the 200. I would like to see an undercut of this and then go forward, but I want to show everybody something on the 1 minute. You're going to go, I think you're going to bounce, but look at this. And we're going to drill into this in the indexes. But before I forget, look at this volume at the end of the day. I mean, this is on the 1 minute. It was just market on buy, get me in. And I'm going to show you why I think this happened today. And it has to do with the semiconductor index. But what do you do with this here? This is really simple. Okay, if I really want to be in this and I'm looking long term, you buy it here on a higher high, and your stop is a close below the 200 day. It's a very simple trade. Don't overthink this. And this is going to trade like an index because it's a compilation of stocks. So understand that. I mean, she's under attack right now, but this too will pass. I mean, they've done these attacks where they go after people for a long period of time. I've seen them over the past 20 years where they'll try to attack funds, and sometimes they're successful if they're completely over levered. 10 to 1 leverage, they can attack them. She's not levered. So you're not really going to be able to attack her the same way. She'll just hold the darn stock. I mean, what's worst case that happens to her? It goes down to here, 90. She's still up dramatically. So it doesn't matter. And you have to think about it that way. People are saying, oh, well, she's down for the year. Who cares? People that are buying this aren't thinking like that, or shouldn't be. If you're buying this long term, you should be thinking 3 to 5 years out. So let's get into this Bally's. I was asked about this one today. And I have gotten a huge response to the idea of me starting to do tutorials for beginners. So I'm going to start printing tutorials on here as well so people can see them. So you see how you're just rallying here? This is, what is this, Bally Corp? This is acting beautiful. Whoever asked to look at this, look at the rise of this and just how it respects it. So you see how it just keeps on going and going. And I think that this looks great. I mean, there's not really much more to say except that, the 5 and the 8 are going well. We have that indicator that I like to use. If we look at the weekly, this is textbook. You're a little overextended. And now you have a doji bar up here on the weekly, which usually means a reversal in trend. But I'm not buying that right here. And I mean, this just looks beautiful. Absolutely beautiful. And look at the all-time volume. So, would I enter it here? Personally, no, because I'm overextended. But let's draw down into a daily and really see what you could do here. So looking at this on the daily, I mean, one of the things you could do, it goes over here. Let's grab this and put this back here. So one of the things is you see this. So, I mean, really, your trigger was this. And once you learn how to draw these lines, and again, don't get frustrated if you can't draw them right away. I've been doing this for over 20 years. So see this, see how you open? You can see this level. This is like a key level, right? So see how you open and close here, and then you open here and you reject, right? And now 1 can't get above it, 2, 3, 4, 5, 6. There's your level, okay? So if I wanted to engage this, I'm not touching it until I get over that 73, 32, 52. Where am I at here? 52. 73, 52, I'm not touching it until then. But you also have another resistance point right here. Just be aware of this, right? You got to flip that. And that's drawn like horribly. There you go. So I may just even wait for it to, no, I wouldn't wait for that because now it's 4 points. So I'd wait for it to flip this, get in it, and then this just becomes your level. And you just watch it from there. So let's get into Viacom. Like this is really, something I want to explain to people, and I wanted to get into this a little bit. You went right down to the 200-day and you found support. This stock is going to find support when people start understanding why it's going down. But the irrationality of this, this is not about PE. This is about complete liquidation of a fund. So there's no thought process here. It is get out, pay me. So what happens is if you have liquidation or you have a huge margin call, they give you till 2:30 that day to meet it. If you can't meet it, the institutions, whether it's Goldman Sachs or your local broker, they liquidate you. And they don't care where they get out. They're just going to keep liquidating you until they get covered. And that's what's going on here. There was an article about it from Zero Hedge on Twitter today. And that's what's happening here. And I think that's what's happening with a lot of these Chinese stocks. I don't think it's just sanctions. I think it's a huge liquidation of a fund. When I looked into it, the Goldman Sachs desk was just flooded with orders. So it might be somebody in their prime brokerage unit that had to be liquidated. So this irrationality, and I'm going to show you an example of this, and I'm probably going to show you an example of it right now that I'm thinking about it. How much people were saying, wow, how much worse could this get? This is nothing. It would be nothing for this stock to just go to $20. It's not about rationality. It's about the firm wants their money so they're not at risk. So they just liquidate. They don't care. Is this company worth less here than it was 3 days ago? No. That's why I'm saying when people talk about PEs, did the PE matter when this happened? The PE's cheaper here. Was it more of a buy? No. Okay, this is structurally broken and can bounce, but it's going to take time. And I would look for these to trade around a little bit. But some of them, they will come back. When they puke out like this, they will come back. And they are long-term buys. Like Disca, even Fubu. So Fubu I was asked about today, and then I'll show you this one idea. So Fubu I was asked about today, like, look, here's your trend line. Here's your trend. You've broken that. You went to the 200-day and you held. And on the weekly, this is major support. Well, we're going to have to, hold on here. And that's not going to work on here on the weekly. We're going to have to just stay with the daily. And maybe I just have to go this way with it, and that'll get me there faster. Yep. Okay. So you have this $22, right? So this is support. And look where we closed. Right on support, right on the 200-day. And now look at this. And let's get rid of all these lines and all these segment lines. And let's get rid of this as well. And just look at this for a second. And we're going to get rid of here. And we're just going to draw this. But look at this. Right? Okay, you have a little line here. And of course, as always, you clone them because you want to see, that's how you're going to get the real trajectory of it, right? So you're really up here, but you would use this. That's just an outliner. So here's your trend line, and here's where you're at. So if you look at this, and you can actually draw this probably even higher. I bet you this goes higher. Let's just see if I'm right. Yeah. I think I'm stretching, but we're gonna call it. Nah, that fits because look at how you hit here. Yep. So what you have here is now you have a collision. Okay. You have a lower channel. You have the 200-day, and you have major support. This is, if for people that are looking to buy this and want to be in it, you actually have a double bottom, don't you? And here's your double bottom. See how you undercut that? That's a true typical double bottom. So what you could do here, if you want to be in this, and it is speculative, is flip over this line. You're not going to want to wait for here, right? You're not going to want to wait for 27 when you can buy it at 22. I get it. I know I'm not going to convince people of that, and I'm not trying to. But you have nothing here while you're below this. But flip over this line, and now you have this confirmed as a double bottom. So if you close, just so we understand that, a true double bottom, and we'll get rid of all this other stuff so people can understand this. And some people say they take notes when I do this. That's entirely up to you. But this is really pertinent and something that you can use in all your stocks. And I just want to explain it very, very clearly. When you undercut a line, like you're undercutting here, right? See the undercut? When you undercut the previous low, this is not the previous low, this was lower. This is the previous low. When you undercut this, and then you go back through it, that is a trigger that people look at. If it closes over that on the daily, people are going to look at that and say this is a confirmed double bottom. It will get buyers because of that. Whether that holds up or not is completely separate. But you have a collision pattern here, which is interesting. You have the 200-day, you have this lower trend line, and I could get back up to here and still be in a downtrend. And then let's just overlay some of the other bells and whistles and see where we might run into more problems. Yeah, I'm so far off the 20-day. I mean, you're so far off this, it's almost due for a bounce. I bet you there's even a Bollinger Band down here that would also be a trigger. Let's take a look. Yep. So now you have 4 layers for this trade. It's starting to look better and better. So now you have the Bollinger Band. So let's just walk through what the Bollinger Band means and how you would do this. So when a Bollinger Band essentially isn't at the range, okay? So this line is your 20-day or 21 days essentially for the Bollinger Band. These are second standard deviation moves, okay? So you really aren't supposed to go here. When you undercut them, usually, it doesn't mean you won't stop going down, but usually it is too much too fast. And it works specifically great on the downside, and also it works better on indexes. However, it can flip to this line. So what I'm saying is you have 4 points here. You have the lower trend line, you have the support line, double bottom flipping up, right? You can get up to the top of this, which is also right to that bar, $31. And on top of that, you have, that's not the one I want. Where is it? 200. There we go. And you have the 200-day. So I have 4 collision points here. So for people that are trying to look at this and figure out if they should be buying it or not, there's your buy. You just need to flip it and get above that. I like this idea for people that are looking for turnaround plays and think that things have gotten a little out of hand. And that might be something that I actually look at the more, probably this weekend. And again, make sure you put on your subscription and notifications, because I am going to do a big buy list tomorrow, a top list. And if you look at the way they've done before, they do fairly well. So Tiger, look, you undercut here, you hit right here, and what did we do? We bounced below that Bollinger Band and through it. And let's just see if I get any love from any other bell and whistle. Not really. So let's get rid of them. They're immaterial. But this is a nasty bar. I mean, just nasty. Opening up, everyone thought they were going to get love today, and then they just jam it right down. And they jam it through like weekly resistance. Like right through major support, boom, and right down to here. Isn't that interesting how this line that we drew today goes all the way back to here? This was our support, now this is. Isn't that, it's crazy. So where it hits. Anyway, so what do you do now? Okay, so right here you're stuck in between this, right? You can do the same thing, but you really didn't have the same kind of jerk down. You really don't have that. Let's get rid of this so you can see what I'm talking about. You really don't have the same kind of move down. This is when we broke that rising channel and I said this is in trouble. But let's remove that segment line, and let's remove this. We're going to leave this here, but I don't have the same jerk down that I had on the other one. I still have a head and shoulders here, and I actually broke the head and shoulders, so that's not great. The FUBU trade between this and FUBU, if you were to ask me, the FUBU looks better than this. This is nasty, and there's something going on with fintech. If you look at Tiger, FUTU, and those stocks, something's going on. So you need to be a little wary of that. So, but could this hold here? Yes. What would your stop be? Your stop's the undercut of this. If you break this, you got to go. You have to get out. And where's your 200 day? Yeah, I mean, that's where you're going to go to if this breaks, $10. So, and it can always get worse. And you know what I do? I want to point something out here. So this is why it's so important for you to have a stop. Okay, so this is when everybody bought, and I just want to show this because this was typical, and it's a classic move, and I get it. Not the move down is typical, but I just want to point something out. This was, and we're actually going to go all the way back to here on this, and this is IQ, and I'm not going to do all of them tonight, but I just want to point this out because I do think it's pertinent. Okay, so here you are, right here. Okay, now look at that. Anybody is going to say that's a classic breakout, right? Anybody, just look at it for a moment. 1, 2, 3, and what do? Boom, we break out. Now, your stop's supposed to be here, and I don't want to make fun of the words diamond hands because it's, I get it. I understand why people are saying it, but I just wanted to touch base on this. This is why this breakout bar, the low, has to be your stop. This is a great example. I quote Mark Douglas all the time, who Trading in the Zone psychology book on trading that you must read if you want to be successful at this. And it's not ego, man. Get your ego out of the way. It's about making money, and the first way to make money is to not lose it. Again, just very simple concept. You're down in 3 days. You're down 50%. So if you didn't sell this, you got hit. And I'll sell it when it goes back up. Okay, that could be 10 years from now with the way this thing's trading. So just keep that in mind. It's really important to use stops. And when people say how far, I got this a lot on FUBU today. How far down can it go? And when I said FUBU was going down, and obviously it did. But let me show you something. And this happened in 2000 when we were trading during the tech boom. And this was something that, and this stock is one that people will know. But, let me just point something out. So there was a fund that got liquidated. Okay? See this? It's a monthly chart. This day, this whole move was 1 day. This entire move was 1 day, okay? And people were panicking, right, because they didn't know what to do. Now, if you had your stop in place, you were fine. But literally, from this day, we were down 70% in a day. So when you say, where can a stock go? It can go down 70% in a day. It's happened before. This is not during, and I wanted to point this out because it's not during the big correction that we went through. It's during just a normal 98, Russian embargo, but this had nothing to do with that. This was simply a fund that needed to be liquidated that people don't know about anymore that was called long-term capital. And they were doing mergers and acquisition trades, and this merger and acquisition unwound, and they were so levered on it, they just puked it out. So when I say the words, it can always get worse, it's because I've been there and I've seen it. So let's just keep on going here. Let's get to this GRWG, and let's get rid of this, and we'll get rid of these since we're not in it anymore. And let's put this back in. And let's put this up. And let's not look at the monthly. Let's go to the daily and see what's going on here. This by hands down, has been my favorite weed stock. But, right now, it's just, we're not getting a lot from it, are we? What I don't like is I don't really like this. We didn't really rally at the end of the day. We stayed down. 1, 2, 3. This is called the 3 black crow pattern. When you have 3 red bars like this, And then on top of that, I have a bearish engulfing. This is nasty. And just start looking for these when you want to know when you should be out of something. When you have a rising wedges always end with a frozen rope. Always end with a frozen rope. You can write it down, set your clock to it. And that's what happened here. And then now on top of that, I got a bearish engulfing right on the support line. You can't touch this here. I mean, I have a left shoulder, I have a head, I have a right shoulder. If I break this, I have a technical break, right? And now I have the H. You don't want to be here for $33, $34. So you need to watch this here. This is not something that you want to be jumping into. Look for the stocks like we just talked about that have already been beaten down, that are already at levels that are you can't believe they're at. But you can see even here the 21 we're not respecting. That 5-8 cross that we walked through before, that's going on. So I would avoid this until this starts showing you signs of life, because they're not there right now. This is ZIM. I got to figure out why I keep putting these things over here. Okay. Just throw another one up here. So actually, you know what I can do too is I can actually just change the background of this. And we'll see if I get a lot of complaints about the blue. But you can see the word ZIM right here now. I just like this platform because it's all web-based, so I can do it from any of my computers. There's a ton of automation and features in it. But so right here, 26.5, right? Look, we hit it, we open above it, we close below it. I don't know on these shipping stocks, I don't know what the Suez Canal is going to do to them. I have no idea how that whole thing's going to play out, if it's going to boost them, if it's not. So let's just look at the stock. Here was your break. We tried to get above here. We couldn't. We got above here and we sold down. Right now, I need to close above 26.55 before I would consider buying it. We were in this at 24. We made 20%, and I stated to people that they should trim before earnings. And then we had this down day. That's why you trim before earnings. There's nothing to do here until you're above 26.55. So I'm going to walk through the U.S. Steel trade today. Kind of liking the blue, I'm not going to lie. So I was going to walk through this trade. And let's get rid of all this for a second. And let's just use bars, because that's really all I need at first. And then we'll get to the levels. So this is a very simple idea. Okay, here's my high. I come back down. I try to break. I can't. So here you go, right? I break out. I fail. I come back down. I try to break again. I fail. First attempt is right here. Come back down, form a little pattern. Here's a rising wedge. How's the rising wedge end with a frozen rope? How do they always end? With a frozen rope. I've got this little wedge right here. And I break it. Boom. I come up here. I test. I fall back down. Now, this is where it gets interesting, because this is the second attempt. Second attempts usually go. Okay? Second attempts usually go, not first attempts. So 1, 2, there's no such thing as a triple top to me. They're so rare that they stay triple tops, right? Which where you go 1, 2, 3, usually doesn't happen. You usually finally break it. So that's why I'm interested in it at this level. And then a gentleman asked me, how did I get the target price? And I'll walk you through it. But very simple, okay? And, again, as everybody knows, I always say, and let me just show this first. I always say this, and you need to understand this, okay? No one has any idea where anything's going. We estimate, we assume, but you need to learn to trade what is in front of you. So here's your little line. So what you're seeing here, right here, when we broke here and we opened below it, and this is kind of important. See how you closed here and then you gapped to the high of this right here, and then you came back and you gap filled, so it touched, and then you went. As soon as we did that, boom, down, filled, and then went and back over this, that was my trigger. Okay, that was my trigger on that trade. So let's go through this, and I'll show you something else that also added to it as to why we did this. And then I'll explain the target price to you. So you see, well, let's not get into that yet. You see this? See how this was completely green the day before? And this from here, from opening down towards the lower end, we held this trend, right? We held this line. See, this line was there, here, and here before this even was in place, showing support. And then we flipped. Now, with that flip, what you're seeing is you're just seeing massive buying. But I have a bullish engulfing bar here. This bar completely encapsulates the red bar. And that's another point that you want to see. And then you just overlay the rest of the bells and whistles, and you drill down into it, right? So we didn't break the 50-day. We broke above the 21-day, which is exactly what I want to see. Remember our Bollinger Bands? So guess who's in charge now? The bulls are in charge of this. And I expect this to break. The way I get to $30 is I need to come up with an estimate to determine my risk versus reward for every single trade. And you break that down. You need to determine your risk and reward for every single trade. So if you're here, and just to put this in perspective, see this 12 points that we could go? Okay, so from this point is 24. This is 16. Okay, so you subtract this minus your price, and that would have gotten us roughly to 29. I rounded up to 30. Why did I round up to 30? Okay, this gets a little more complex, but I'm just going to give you a really simple way. Look at this. Okay, look at this move. Okay, I could be a lot higher than 30. I could be in this channel and a lot higher than 30. So you need to keep that in mind. I went with what I consider conservative. There's a $3 trillion infrastructure bill floating around out there. And I think part of it might go through, and U.S. Steel is going to benefit from it. And there's another one that I think benefits from it too that we'll get into in a minute. So that's how I came up with that trade. So here we have NNDM. I'm not going to lie, I'm really digging the blue. So let's put this up here. This just does not look great, and I think that it needs a little more time. And as I stated earlier on some of these videos and in the newsletter, when you have a correction, the smaller ones are going to take longer to come back because there's no liquidity. That's why I was recommending, buy TNA, buy SOXL, buy TQQ if you want to play, because they're going to come back first because institutional money is going to go there. I have no undercut of this, right? Like I did with, FUBU. There's no undercut here. See how there's an undercut here? There's no undercut on this. So I just have this trend, and I'm floating around, and I'm behind the 20, the 21, and the 8, and where are we with the 5? I mean, there's just nothing here that's attractive about this. What would make it somewhat attractive would be is if I could stay in this rising wedge that's developing, and you can see part of it here and here. I'll just throw it this way so you can see what I'm talking about. See this? And then you just go here with it. And we clone them so we have the same trajectory. The trajectory is more important than the points. See how you're in this? Bonk, bonk, right in here? And I can get rid of these to make it even clearer. So now I'm in this range, right? And I'm at the low end of it. If I can flip this, it might make me go to here. But there's just too much going on here that's just not attractive. This is a massive H pattern. If this engages and breaks this, you're going lower. You're going a lot lower. So I would just look for greener pastures. If you want to play the lower price stocks right now, look at these NFT stocks that we played last week. We did exceptional with some of those this week, and a really, really tough tape. CX, I believe it's cement. So, look, it's a smaller cap stock. I mean, the one thing that sticks out in 2 seconds, probably to everybody watching this, is this. You really want to be here. So you're not really breaking this, right? And you're just kind of riding along the lines, and let's just throw in the big ones for a moment. Okay, so you got to get above this 21, and the 50 we finally got above, but you got to get above this 21, and then maybe re-engage. And you have another little channel right here that you need to pop into before I would touch this. Let me just close that and clone this, and we're going to clone that right here. All right, so you see that? I mean, right there, you need to pop back into that channel, and over 21 gets that. So that's how I would look at this. If you're looking at trying to do an infrastructure play, and you're trying to do this on an infrastructure play because it's a cheap stock, my advice is wait for a pullback on U.S. Steel and add to it. I will be adding the U.S. Steel on pullbacks, and I'll notify people on Twitter when I do it. So this is one that we did in last week's video. So we talked about this and their deal with Atari, and you know we traded it a lot. And see this line right here? There's when we break above it. The moment we come down below it, people that know and been following me for a little bit, you have to sell it. You got to go, and that's what happened. Then we came back down. We tested support and we held support, and now we're trapped between 437 and 355. And these are not giving us any indication of what's going on. So we can throw in the 5 and the 8, and you can see here that we're below the 5, we're below the 8 on the close. This is not where you want to be. And I have a rising wedge here, even though it's, let me go here. I'm just going to do a 4 hour because it'll probably do it. Yep, so let's get rid of these for the 4 hour. And then we'll do the indexes. And I do want to do Bitcoin too. So, yep, look. I mean, this is setting up. This is setting up for a frozen rope. So just be careful. I like the idea. I think these stocks are going to be around for a long time. I do not think NFTs are going anywhere. I don't know which stocks are going to win and which ones are not going to win. You know, we did well this week with TKAT. But, you know, let's just see how it plays out. So that's it for stocks. Let me get into... Let's just do this. So, you know, this is Bitcoin. That's a 4 hour. We're not going to do the 4 hour on this, even though you can see that wedge there. So this is what's going on, and these are our levels. And we're just stuck. We're just stuck here right now. And let me just throw this out there. I don't know why it came down here. Maybe I moved it for a moment. So let's just throw these in. Okay, so you see what the 50-day is and the 21? What happened today? We bounced right off the 50-day. Okay, 50-day line is where institutions buy. Just remember that. 50-day is where institutions buy. It's where the portfolio manager cannot get yelled at by whoever is above him at sea level. Okay, because he said, oh, I bought it at the 50-day. And, oh, well, okay. I mean, it's really that. It's really a way of them covering their butt. So what you saw here is you saw a little reversal, right? Now the 21-day would be where the bulls will be back in charge. What I like about this trade, just very clearly, you see how we bounced here on this and here? And I'm not saying it can't come in, but the fact that this stock, or whatever we're going to call Bitcoin, store of value, whatever new term you want to use, what I like about it is if it starts respecting the 50-day, it's telling you that institutional buying is there. And you need to pay attention to that. Now, I have a huge trend right here that is telling me this thing can go to 70,000 once we flip back over this. So if I flip over 58.5, there's no reason this can't go to 70. And by the time it flips over 58.5, it could be down here and be heading for 75. So this still has potential, and I would not rule this out. Now we're going to get into the other indexes. And I'm going to do the SPY first and just look at what transpired here today. Okay, 394, as we said in the newsletter, was resistance. And what did we do? Okay, we went right through it, right? Boom. And look at that. We actually gapped over it. And pay attention to this because it's really important. And I didn't, I was so busy trading today that, frankly, I didn't even notice it. The low of the day on the SPY was the open. The high was the close. It doesn't get more bullish. We're probably going to here. You've broken this downward trend line here. We're probably above the 5 and the 8. Yep. So we haven't been above the 5 and the 8 since here. So this is going higher. We're going higher on the SPY. Now, you could have a market that's similar to 2011, 2012, 2013, where you see the New York Stock Exchange stocks become the leaders and not the NASDAQ. It's rare, but this could be telling us that's a possibility. And let's just do IWM. Now, IWM yesterday, I got in and then I got stopped out on a break even, and that happens to the best of us. And it is what it is. It's part of trading. But we're above that 218.18 level, and we're right at the 50-day. Flip the 50-day, get me above the 21-day. So you can see right now, and now we're going to do the NASDAQ, but you can see what the stronger market is. It's not these small cap stocks. It's the larger SPY stocks, right? Money will flow into larger companies first. I mean, it's really that simple. Don't overcomplicate it. So what's going on here? Well, I'm going to show you the stocks next, but this is a precursor. The stocks is a precursor to what's going to happen. But what I want to do for a minute is get rid of all this and just show you how to read price. Let's get rid of all these and go through this. Let me know how you guys feel about this blue too. I'm kind of digging it. I'm kind of curious how you guys like it on the screen or your mobile, whatever you're looking at. You see that line? You see that downward trend line? Right? I mean, I can tell by looking at it. I want 321, right? I want that 321. I want that flip. But if I break this line, I guarantee Monday, if I truly look at this line, it's like 318, 319. And what we'll do is we'll drill down into this because this is important, and I'll go over it in the newsletter. Here's this range. But look at this right here. Look at that break. And this is what I was watching all day. We were here, right, on this hourly, and then we broke down. And this is why it's so important to understand how to run trend lines. Look what we did. We came down to the rising wedge. What happened on the rising wedge? We went the other way. Now, I was so busy. I was so busy today. I didn't catch that. I didn't catch that rising wedge until I'm looking at it right now. But because I was extremely active today, there's a lot of opportunity in the market. So, but I pointed out that, like, look, you're right here. And then we came back down and we tested this rising wedge, and then we broke out. Here's another breakout of that line. Okay, here's more breakouts of that line. These lines are becoming support. They're becoming definitive support. And I stated this a couple weeks ago that I think that we have bottomed in the NASDAQ, but we need to flip this line. But let's remove this for a second. And let me just show something, because there's always more than one. But let's just redraw this for a minute. So where does that put me to get above that? 318, right? Because I'd be this day. So you'd be here. 318, 319. So a gap up over that. Now, here's why it's probably, well, I shouldn't say probably. Here's why it can happen. Yeah. And you may see some of these in the newsletter next week. Okay, nothing is fixed. We need to rally over the 428 line. What did we do today? We haven't gotten there yet, right? Here's 428. What did we do? We held this and we supported it. We broke this little one here. Remove this. Let's throw in the candlesticks. Look where you closed. So you are technically above that line. Okay, and let's see how that works. Take a moment to look at how long that bar is. Right? So you have a really long green bar. And look at this chart, and when was the last time you had a long bar like that? You haven't. Okay, that shows buying. That shows significant buying in the Philadelphia Semiconductor Index. Now, one gentleman asked me, hey, how was the volume? Okay, this is the volume. Maybe I'll just do this on the hourly, but this is the last minute of the day, so you can see what's going on. This is the volume at the end of the day. Okay, we're above average. This is on the SOX. This is on the Q. Okay. This is on the SPY. Okay. See what I'm getting at? Look, what were people buying more of than above average? Not more, but above average. They were buying more of the SPY, IWM. Okay. What weren't they buying? IWM. less than average. It shows you where the money's going. Okay, when you start breaking it down like that, that's one way to read, price and where relative strength is coming in. But I really want to point this out one more time. This is something, and you may see this in the newsletter soon. Okay, this is a 3X index, and this is SOXL. And that's going to throw this in, and then we're going to wrap it up here. So what you want to do is just look at this. This is a precursor. Why is this a precursor? Okay, and you're going to see some of these semi-stocks in tomorrow's top 10 buy list. And it might be longer than 10. But you see that break on the hourly? Okay, this is a precursor to what's going to happen in the stocks. That's why people went nuts with it when this transpired. Because we've been waiting for this since back here. So you've been waiting for this to happen for 40 days. You've been waiting for this moment, and it happened today. And it's pretty substantial. So how would we know that this is substantial and that this is going to continue? Look, the only way to know that is to now this becomes a support line, right? So let's just bring this up here because you got the idea where I'm going with it, 40 days. So what's going to convince us here? Now this becomes support. And if I fall back under it, it's negated. It's that simple. That becomes your stop. But this is setting up for a major move. And I'll just give you one really quickly that you need to, that may be in tomorrow. I have to run them all. But if you start looking at the shortage that's going on in semiconductors and look at these bars and how they're breaking out and look at these breaks. I mean, these are the stocks that are breaking. Look at them. So you might see more of these. So that's it in a nutshell. As always, if you could do me a favor and please click the like button. I'm trying to get in front of as many people as humanly possible to show them what it takes to be consistent and profitable as an investor or trader. Have a great weekend, everyone.